And now we will kick off with the conversation around the economy, the outlook. The pace in the Nigerian economy remained soft in 2019 after the general elections. In 2020, the outlook for the Nigerian economy hangs on a framework of a well-intended but slightly, mark the word, slightly uncoordinated policy outline. Notably, the recent Central Bank of Nigeria Act and the ongoing reviews of the Tax Act via the Finance Bill will support the implementation of the 2020 budget and beyond in the face of sharp rising debt profile. That's another conversation for another day, right? But I'm sure it will come in here somewhere. But the early passage of the 2020 budget by the Senate in December 2019 to return the economy to a January to December budget cycle, the National Assembly, not just the Senate, effective 1st of January 2020, is a positive development. But is it enough? Well, these questions we will hope to get answers to. And to help us, we have Wilson Rumebo, Senior Economist, Nigeria Economic Summit Group. Welcome. Also here is Ayodeji Ebo, Senior Associate of Afri Invest.
Yeah, thanks.
And joining us from our Abuja studio, we have Dr. Chijioke Ekechukwu, former DG Abuja Chamber of Commerce and Industry.
It's my pleasure.
Let me just start off with you, Dr. Ekechukwu. At a point, it was as though the major conversation, or the major talking point was returning Nigeria to a January to December budget cycle. And there were those who thought that this would make the difference. Now we're back in that cycle. Do you see any light, not at the end of the tunnel, in the tunnel?
To have started the budget on a cycle of January to December, what that meant was that we already started on a good pedestal. Having done that, and hoping that that will continue, the next will just be to ensure that we have major economic policies that will continue to increase our growth pattern and give us the much desired targets for our growth. And these things are very clear, and unfortunately, really, we, just like you mentioned when you were doing your intro, that we still cannot see the coordinated pattern of our economic movement and policy. And having said that, you also see that we still remain heavily dependent on our oil revenue. You see, when you make your projections and your plans based on what you do not have control over, it becomes difficult for you because you don't have control over it. We don't have control over the oil pricing. We don't have control over the demand size. We don't have control over what will happen in the next 1 month concerning that same major source of revenue. So if that is the case, then we'll only continue to put our plans in place, and then the other side will go and kneel down and continue praying to ensure that all these things work out for us. Of course, within this short period, just because of something, a virus that is affecting China and the rest of the world, oil prices are going down because the demand for that particular oil has come down, and the danger of having demand coming down, which has affected the oil price, is the fact that it will be difficult for even OPEC to be able to control the pricing, because if it was supply, what they would do would just be to cut down the quantity, the production output. But this is a situation where demand has come down. And if that continues for such a reasonable time, of course, our budget estimate for oil pricing at $57 a barrel. And here we already have oil price going down to about 58.3 or 0.2. And so when we have such a situation, then we may have to start panicking a little. But on it all, we're also expecting that the new increase in the VAT from 5 to 7.5 will give us a little leeway and generate additional revenue base to fund the projects the government said they're going to fund.
Okay. All right. Mr. Rumaba, it's interesting that he's talking about us still depending solely and making our budgeting based on oil. But we've been talking for years now about increasing our revenue base. We've been talking about, and the stress has been on agric. how much are we really doing and how much result are we achieving from agric to help us with this oil thing that we've been talking about for ages?
Yeah, I think, first of all, the fact that we have relied on crude oil for the past few decades, and not just in terms of revenue, in terms of export earnings. So if you look at the share of our exports in terms of what crude oil contributes to that, it's close to about 80%. In the last Q3, came down a little bit to I think about 75%, basically because of the slowdown in oil output. So, but again, you see, the issue of diversification has been something even the NESG has been pushing for over the last few years. And you see, in terms of job creation, there are these sectors that have very huge impact on job creation. So, for instance, how many people are employed within the oil sector? Very few. But if you look at sectors like agriculture that you mentioned, about 48% of Nigerians are employed within that space. And there are other sectors like manufacturing, where you get to convert some of these agricultural outputs into processed products, and then you can export to other countries. So I think.
So how much of that do we really have?
Yeah, that's the point. So we haven't really paid attention to some of these sectors that we call value addition sectors. So sectors that can actually move people out of poverty, which is a major challenge. And if you look at the
We'll come back to about that issue about the sectors that can move people out of poverty. But let's take a quick break now. Back in a moment. Please stay with us. Thank you for staying with us. Mr. Umar, you were talking about those things, those parts of the economy that greatly impact job creation. I know you mentioned manufacturing, construction, some of these things, even agriculture, that's one Alera anchored on. But how effective have these sectors been in creating these jobs that we're thinking would help change the situation in 2020?
Yeah, so if you look at Nigeria's employment history in the past few years, a lot of people are employed within the agricultural sector. It accounts for, like I said earlier, about 48% of the people within the sector. So you have several other sectors that have very strong potential to contribute to the economic growth of the country, but they are not doing very well. Manufacturing is one of them. So, for instance, manufacturing sector is about 9% of the economy, which is very small for a country like Nigeria, and especially given the fact that Nigeria's role in Africa, we have that potential to dominate markets by exporting to these other African countries. That potential is there. If you look at Nigeria's import situation, we import about 50% of what we import are manufactured goods. So that tells you that this sector has a very strong potential. It has a very strong forward-backward linkage in the sense that you get inputs from agriculture. You can process that and then have a finished product that you sell to the market. So in the process of processing those goods, there's that value chain effect that you can have. So you need people, you need to employ people within this sector and all that. So we have construction industry, for instance. We have education and health. We have professional services. And then trade, which is one big sector as well. But we did a study at the NESG in our macroeconomic outlook and found out that these sectors have not been contributing so much to employment and so much to growth, and despite their huge potential in job creation. And we then said, if the government, because again, there has to be some level of direction. Nobody will just wake up one morning and say, I want to invest in manufacturing because there's potential. No, it's not just about potential, because we all live within a policy ecosystem. One policy can truncate all your millions of dollars of investment within a particular sector. So we've seen that happen, there are several examples we can point to. Is it the sudden closure of the border? There are people who have invested in plants who are feeding neighboring countries around Nigeria. So that's a loss to them. We've seen whether it's the Visions Cape project in Lagos, whether it's the recent ban on bikes. So when there is little or no policy consistency within an economy, it affects the growth and development of some of these crucial sectors, because we're talking about FDI, we're talking about significant local investment in the real sector. So if the quantum, the amount of investment required in manufacturing and co is usually huge. And you need some level of consistency in policy to be able to make sure that you can invest in a particular sector. So until we start paying attention to some of these issues from a governance perspective, in other countries, you would see where a government would set a direction for an industry. Within manufacturing, there's so much potential in cassava processing, for instance. Many of the food and beverage large companies in Nigeria import industrial starch, which is also a byproduct of cassava itself. So, but we
Which
rely...
we have in abundance.
Of course, but we mostly rely in processing cassava into gari rather than that. So, as a country, there are countries that government would come and say, these are the areas that we think we can compete globally. Even local demand exists within these areas. What do we need to do as government to remove all the bottlenecks for investors to come in? So we've not seen that happen so much within the manufacturing space. So I can say that the sector is actually moving without direction. And it's very, very crucial for us to look into this as a country.
Not encouraging to investors at all, especially those who are supposed to come in from abroad.
Absolutely.
Now, let me bring in the SMEs. They say that the engine room of the economy is the small and medium-scale industries. Do you think that we are doing enough to encourage SMEs to grow in Nigeria, such that they will affect the economy positively?
I don't think we're doing enough. Looking at even starting from credit is a major factor for them to be able to grow.
At 22%.
Yeah, so you would see that when you look at in terms of the employment, and they also generate, because most of them are even around the informal sector. They are not properly captured. Though you may say with this new Finance Act, there's some form of support that exclude companies that has turnover of 25 million and above from paying tax. However, before you can even pay the tax or grow to that level, you need some form of financing. And would see that for even the banks, even with this current loan-to-deposit ratio to ensure that banks lend to the real sector, most of the lending or retail lending has been going more towards the salary earners, that they feel that the risk level has reduced to a certain level. But what we think is that some of the banks need to carve a niche for themselves. Look at the SMEs are in several sectors. Is it the agri sector that you want to develop your staff, develop a very robust risk management system, understand the cash flow, understand the risk level within that particular space, so that would inform your lending. You know how in terms of the seasonality of that particular space. We need to begin to see our banks begin to carve a niche for themselves and begin to lend to some of these sectors. If you want to continue, apart from when you look at, there's an analysis that the National Bureau of Statistics carried out in terms of looking at the credit in the credit to Nigeria economy. Like we pick the top 100, accounts for over 50% of total credit. That's like a concentration risk. If you lend to the SMEs, and with the credit bureau system that has also been in place, it will reduce in terms of the default rate we used to have then, that you can't easily trace. There are serial defaulters that you move from one bank to the other. But now with your BVN being linked to your company, you would be mindful in terms of how you default. We feel that if this, in terms of the low rate environment, you can see deposit rate has reduced. So if you assume, for instance, that the premium or risk premium that the bank places on some of these SMEs, let's assume, for instance, is like 15%. Then when deposit rates, your placement used to be like 12, 13%. By the time you had the 15% premium, that's like 28%. But now placement has gone down as low as 2%. So they should be comfortable. By the time you see harder your risk premium of about 15%, then the rate at which you lend to them should be considerable, because you look at the margin of most of these companies in terms of profit margin, let's say between 15-20% maximum, because of the cost of doing business is still very high. So you can't have a business that will return about 15-20% and go and borrow at 30%. You're already out of the money from the first day. It's not bankable. So we'll begin, if that rate begins to drop, and the mindset of the banks also will begin to see some form of shift. I'm not saying they should just give out money, but you can study, do your detailed analysis, and understand a particular, each sector. So banks can be known, each bank can be known for different sectors,
Yes.
you know, for agric, for manufacturing. But we'll know that this is your forte, and you will develop, once you do that, it will minimize in terms of non-performing loan that would expect within that particular space.
The question I want to ask is, do you see the banks, because I was going to go to the AfriInvest Economic and Financial Market 2020 report, I was going to go there, and we'll still get there, but we're talking about the banks and lending. You notice that these days the banks send text to or tell customers that you have access to what they call easy cash, in quote, at I think it's about 2% or
yeah, even for some of the banks, as low as 1.3%.
Okay, but the question then is, do you see the banks specializing? Because those messages most times go to individuals who are salary earners.
Exactly.
Not necessarily the SMEs. So at the end of the day, those that are running businesses have issues with financing, but salary earners are getting easy cash. Do you see the banks specializing so that they can take up some of these specialized SMEs so that the businesses grow, their taxes grow? Because part of what you talked about in your report is that even the new tax initiatives are not going to help the revenue gap.
Yes, I'll come to that in terms of the taxes, upping the revenue gap. But that's my point in terms of the banks needs to, the mindset needs to shift. So currently, that space of salary earners is getting saturated, that you get like 5 SMSCs from 5 different banks. Yes, there will be competition in terms of rates. We'll see that they'll get to a level where they can no longer reduce the rates. You have some per annum around 15%, some around 16%. Yes, that's interesting that even for the salary earners can also begin to see how can I support 1 or 2 businesses. You can borrow money at a reasonable rate, and you can support the real sector, the businesses. But the focus also needs to gradually change to these SMEs. Yes, the element of risk is significantly higher than the salary earners. I agree. But if you understand the sectors, for instance, agric that accounts for a major part of employment, over 10 million, you would, if you study in terms of the seasonality. So you know if the issue of insecurity, fine, it's there. But if we can also have some form of insurance on some of those agri products, then you have off-takers, because some of these companies that produce still import some of these goods. So they'll standardize in terms of the produce, and you are able to sell. If we begin to see that and the support, we begin to support that, I feel that the SMEs would be able to grow. Manufacturing, which Wilson also touched on, most of these companies will need distributors, and you need funding before you can be a distributor, for you to be able to penetrate across. Can the banks try to see how they also want to partner? Because for some of them, the kind of collateral that they still even require, even if you are a distributor and you need to place deposits with, you need to get that license for you to distribute, is still very cumbersome. So we would begin. Trade is also a major area that also contributes to employment. If we see that as much as possible, you register your business, and they can check in terms of the volume of transactions that comes in. They can begin to cap it, so they can start that based on your monthly volume. If it's just 1 million, okay, you'll be entitled to borrow about 20% of that. They will be encouraged to move all their businesses and trade formally through the account, that you can even trace it, because you know that you have a target. If I'm able to access 200,000 today, I want to grow my business to 10 million so that I can access 2 million tomorrow. Once we begin to see that consistency, and as much as possible, we'll begin to, one, financial inclusion, even the VAT that we're trying to capture the informal sector. Those businesses, you can be able to account for them when you're doing your annual returns. You'll be able to file correctly, and that can even boost revenue.
No, I'm hoping that you take on the tax thing real quick because we're running out of time.
Okay. So on the tax thing, you know, the way the VAT that even has been increased, only about 15%, 12 or 15% will go to the federal government. So yes, maybe positive for the state government, but with that increase, based on our estimate, it's still less than 1 billion that the government will be able to will be able to recoup from or make from that particular policy. So that's not going to be, it's still very minute. When you look at the gap within the budget, it's very significant. Our estimate is that the revenue gap would be, the performance will be about 40%. This year, that's about 4.6 trillion.
While the VAT is increased, the number of taxpayers, do you think that has increased?
I don't see, for taxpayer, there must be an incentive. That is why I'm saying it needs something, you need to bring them to that tax net. There must be an incentive. So if I know that I can access funds by registering my company and also declaring the total transaction within a particular bank account, then a lot of companies more of them will come into that tax net and try to see, because the advantage that they have in terms of access to funds to grow their business will make them declare most of the transactions that has been done within their particular business.
Even though the interest rate is inhibitive.
Yes, but we'll feel that that may also reduce as we progress, because even the deposit rate, so the banks take funds, we will check like 2 months ago, it used to be as high as 10, 12%. Now it's as low as 2%. So if you add that same spread or premium, that risk premium, it should reduce. But we feel that it should reduce as much as possible.
This is Nigeria.
Dr. Ikechukwu, you've heard the two analysts here talk about the economy as regards employment and then the tax net and financing. But what I want to bring to you is the area of the market itself. By the time this investors get the financing they need and they get the incentives that they need, is there a market for their produce? Are the markets ready to receive the produce that they are possibly likely to bring forth into the market and at the premium price, so to speak?
Yeah, considering the population of Nigeria, you can agree with me that we have a very good and large market. The market is not just only in Nigeria. We have the West African frontiers included in our marketplace. My concern is that most of the efforts made to grow this economy are made by the federal government. Now, we have states, 36 states in this country. We still do not see the concerted effort coming from these states to actually grow their own states, the economy of their own states. And because monies they receive come from the federal every month, you see that no serious effort is made to grow this economy in any of the sectors. In fact, every strategy we're making from the federal should actually dovetail into the states, to the extent that the states should have their own economic team thinking on how to grow the economy of their particular state. Now, when we have all states working so hard to ensure that the economies of their states grow, then we're going to be having a cumulative or concerted efforts coming from the entire country through the states to the federal. So if all the efforts are made by the federal government to ensure that this country's, the economy of the country grows, and the states are doing nothing, don't forget that the poverty level we're talking about are all domiciled in the various states. And because they're domiciled there, the states are not seen to be doing so much or even enough to get their people out of poverty. Again, everything we hear from the state is just all about payment of salaries and not payment of salaries. It is far beyond that. Every state should have a team. The same way we have our economic team right now working, even though we have not heard so much about them, whether they are giving their suggestions and recommendations to Mr. President, we do not know. But we know we have a very solid team in that economic team assembled by the federal government. They should be able to interface in with the state government and
Yeah.
taking decisions and agreeing on all those things, and so that we'll see the effect of all that we are saying and doing to dovetail towards the states.
Okay, Dr.
Otherwise, I
The
think we have a
question,
very large market in Nigeria.
the question I'd like to ask, based on your submission now about the states and their economic team, all states basically all talk about different aspects of their economy and what they're going to do, or their plans to ensure that the economies are able to move forward. But have you seen any buy-in from the federal government? I mean, if the states have ideas, a case in point, you hear Cross River State talking about a deep sea port and clamoring for a federal government support. You hear Abakaliki talking about the rice. You hear about all states, basically all the states are talking about different things. There's Kebbi and Lagos State coming up with the lake rice, all manner of investments by the states. But do you see a federal buy-in in these economic ideas from the states that you think will make any difference?
Yes, first of all, the states are, when it has to do with some kinds of investment, they will rely on federal. But I can tell you that these states are very autonomous, that they can really start and finish any business proposal and get involved in any business interaction with anybody in the world and begin to make huge profit from them and turn around the economy of that particular state. In such situation, except there is any enabling act or bill that they expect from the federal government, I do not see anything they expect from the federal government apart from making sure that it works. It's
Okay,
like
Dr. Ketchku, please hold your thoughts. We need to take a moment. When we come back, you tidy up your submission about the state economies, because I'm sure these two gentlemen want to weigh in on that as well. We'll be back in a moment. Stay with us. Thank you for staying with us. Dr. Ikechukwu, you were saying something about the states and their economies. You alluded to the fact that they are autonomous and they can, on their own, take certain actions. But when they take those actions, you do realize that some of those actions they need to move their economies forward will require a federal guarantee. There are some legal sides to all of this. So how would that work together?
Yes. We obviously cannot rule out the importance of federal government in adding value. But I want to believe that a very responsible federal government will want to guarantee anything that will add value to the economy, which is the economy we are building on. Except a state is borrowing money to do some other things, and of course, except they have become over-leveraged, then it becomes difficult for the federal government to do certain kinds of guarantee on them. Otherwise, there may be other means of jumpstarting. Either you go into PPP or other avenues of making sure these things happen without having to involve the federal government. As business concerns, that's actually what I call these states. They are SBUs. So they should actually think about what sources of funding they're going to get within themselves and what to execute with this funding, and in fact, the outlet for whatever thing they're doing. They are at liberty to interact with any institution outside the country and get involved in foreign direct investment into their own state, which is actually what some of them are doing. But the extent of success of some of these efforts is the one we still cannot ascertain. So it is important that as we are running the federal government programs, with the states also must get involved in all of them so that we have a concerted effort towards growing the economy.
Ayodeji, this matter of uncoordinated policy and what he said about the state knowing who they are, they have liberty to interact with anybody around the world. But tie that into this. Festus says the federal government should involve diaspora Nigerians in the implementation of the 2020 budget so that its economic benefits can be realized in technology, education, health, and entrepreneurship. See, he's talking federal government, but Dr. Ketchku is talking about the states and what they can do with the powers that they have.
Yes, it's interesting that there's always been a lot of focus on the federal government. I feel that at the state level, even the governors, if they form themselves into regions needs, if they are very coordinated, they can achieve more. For
Keyword
instance,
being
before
coordinated.
what I mean is that, like, if you look at from Lagos, Ogun, Ibadan, those governors can, even before the new rail system that the federal government is trying to construct, those governors should have come together and have like a PPP arrangement. You can open up your state. You can open up the Ibadan state that people are working there, and you have a sharing formula that though you are staying in Ibadan, you are working in Lagos, this is how we would share in terms of your tax. You can also factories. Lagos doesn't have a lot of land compared to those other states. They can set up factories there, and the goods are coming here. The cost of transporting those goods will be minimized, such that for people staying in Lagos, the cost of purchase would reduce, because we are all aware of the bottleneck in terms of clearing goods at the Apapa. Most companies are going to set up their companies across neighboring countries and importing to Nigeria. So if you see, even you look at the southeast, if they come together, there may be a major road that they need to have an arrangement and partnership with a private investor, and be sure that no new government would truncate, because that policy somersault inconsistency has always been sending a wrong signal. FDI last year is less than $1 billion. For infrastructure, we continue to rely on the government. The federal government spent about $3.5 billion on infrastructure last year. And based on, I think it's NESG, based on what the chairman of NESG said, we require about $100 billion for us to fix that, excuse me, infrastructure deficit. So how long do we get that? You can leverage on, you're already projecting about 2.5 trillion for capital project. But we know that with the revenue gap, you're expecting about 4.6 trillion. Your expenditure is almost about 8 trillion. It's infrastructure that would suffer. And that is when we talk about ease of doing business. You need to, for the trade sector that contributes significantly, you need to be able to have links in terms of roads. There's been a study that the cost of bringing a container from even China to Apapa is significantly lower than the cost of taking that same container from Lagos to Kano. It means that indirectly, the cost of living of those guys have been increased because of you had to factor in that transportation logistics cost into that good when it gets to Kano, for instance. So if we feel that if we don't take care of some of these things, we would continue in terms of, we're talking about a lot of people being below the poverty line. Yes, disposable income is being pressured as much as possible. You won't be able to...
That link between the states, how do you think it will work when they are competing amongst themselves? They rather compete than collaborate. That's what it looks like.
That's the problem that we have. You have, maybe it's not my party, but if we all leave aside selfish interest and you look at the goal, and we leave politics away from this, look at the long-term goal of what this would achieve as much as possible. Low-cost housing may be easier to build your house. The cost of building the house or cost of land in Ogun State and Ibadan or Osun State may be significantly lower than the cost of acquiring that in Lagos. And if the pressure in Lagos reduces, even that cost would also go down as much as possible. And across, for those states, the populace will be the one to benefit.
Maybe Amotekun is the beginning of this cooperation that you're talking about. But Mr. Rumabo, we need to bring in the slogan, our latest slogan, ease of doing business.
Yeah.
So how much ease have we seen in doing business in Nigeria in all the aspects we've been talking about?
Yeah. In the last few years, I remember at one of the Nigerian Economic Summit we had, I think that was in 2015, we called it Tough Choices, and we even invited one of the former prime ministers of Georgia, Nika Gilauri, and he made a sound presentation on some of the reforms he did when he was prime minister of Georgia. It was something, very little things that changed the mindset. In short, he woke up one morning, according to him, and said, why do we have traffic all around? He fired all the traffic wardens, and all of a sudden, the roads were free. traffic, he came up with a policy, I think it was themed no means yes, that if you apply, silence means yes. If you apply for a license within a government agency or whatever you apply for, if you don't get a response within 30 days, go ahead and execute what. So if you want to build a house in the middle of the road and you apply and you don't get a response from a government agency within 30 days, go ahead and build your house. So it means everybody had to sit up, because if you are building your house and you say, yes, I applied, and you show evidence and they trace it to this person who was supposed to reply and he hasn't, so he will lose his job, and there are other consequences with his management. So it means everybody had to sit up within and the country moved within a short space of time.
Management system.
Exactly.
So some of these things are incentives, and what is the behavior of a regulator, for instance? What is the incentive of a regulator? Are they mostly there to just, put pressure on businesses to collect whatever revenue they can? You want to file for something. They are not looking at how to support your business to grow, but it's more about revenue. Even agencies, whether it's the customs
and if they help you grow, they'll make more money from
absolutely,
you anyway.
because that's how government can, generate non-oil revenue. Before the closure of the border, I was a part of a group, and they found out something, that between Nigeria and along the Seme route, there were about 26 stoppages, whether it's checkpoints, whether it's police, whether it's 26. So, I mean, if you're an exporter, a non-oil exporter, you produce tea, coffee, you sell to Ghana. And you know what happens, of course, in Nigeria at each of these checkpoints? It's not just to check and go. You have to, So some of these things are costs that eventually make Nigerian products uncompetitive.
Yeah.
By the time your goods arrive at the destination, it's already too expensive. And then you have Chinese goods competing, coming into the continent. So it's challenging, and regulation is one key area. Although we've made some progress within the last few years with the Presidential Enabling Business Environment Council, that's the EBS. They came up with several reforms to see how to make, starting a business easy. You can go online and do that. But I think there's still a lot more work that we need to do in that regard. Okay. And I'll just give a quick
No, we have to end it here. Thank you so much, Mr. Wilson Erumabo, Senior Economist, Nigeria Economic Summit Group, Ayodeji Ebo, Managing Director, AfriInvest Securities, and Dr. Chijioke Ekechukwu, former DG, Abuja Chamber of Commerce and Industry. Thank you, gentlemen, for sharing your thoughts with us. We've been talking about the economic outlook, and one of the key things mentioned is synergy amongst everybody, state, local, and everybody. We'll be back in a moment. Please stay with us.